Hey everyone, Steve here from 11ish, a channel where we talk about lucrative investment strategies and opportunities based on the requests from the 11ish collective. As COVID gets worse in the United States, I think it makes sense for us to look for more opportunities where they benefit from the COVID crisis versus looking for opportunities where they benefit from the recovery of COVID crises. I've been looking at Zynga for a long time now. The reason why I haven't been talking about them is because frankly, I thought there were more interesting opportunities. Specifically, Tencent and Sea Limited. If you haven't already, check out the videos. I'll provide the link below. I also think Zynga makes sense, especially now because their earnings is coming up. Now, by the end of this video, if you like what I'm selling you, if you think that Zynga is a good investment, I'm actually going to make you a separate recommendation because I think the business model is almost exactly the same, except some caveats that makes it a better opportunity for us to invest in. And so, if this is the type of content you've been looking for, please hit the like button and let's get started. Now, to give you a little bit of context in case you didn't grow up in the era that I did, Zynga started off of the back of Facebook, and they created really great games like Facebook Poker, Farmville. They created games that has this casual gaming aspect to it, but has an addictive quality and a social quality to it that made it grow super fast. Soon enough, they've made enough money to go public. Now they've gone bigger and bigger. If you are actually looking for entertainment, I highly suggest that you Google Zynga first CEO to get some information because that was such a shit show when that IPO'd. It's absolutely fascinating. But that is the past. The company has moved on and has been doing very well. Because I'm personally in the product management space, anecdotally, Zynga is known to hire a lot of B school people. And B school people are really good at analytics. They basically get a product, look at its analytics, see the user behavior, analyze it in a way where they can basically squeeze out even more money off of the existing user base. Figure out how to change the user experience so that it can get more engagement, more retention, right? This is the bread and butter for every product managers, but B school students, they're even more hardcore about, very quantitative analyses. And so if you look at Zynga's gaming library, it kind of represents that, right? It's very heavy on the search engine optimization play. And it's very much heavy on, finding games that work and then changing it just a little bit so that it can capture more user audiences. So a good example is that merging games are a very hip concept right now. You basically merge different objects from the screen to create another object. There's an entire gameplay built on this idea. You can see Zynga has used keywords like merge gems, merge magic, merge town. The idea here is that if you search for things that involve magic, things that involve gems, things that involve town, which are also games from different gaming companies, they're also utilizing these keywords to show up so you, the person who's doing the searching, might also have an opportunity to download their game in addition to the game that they were actually searching for. That is absolutely great in terms of search engine optimization. And on top of that, the game itself is built on an idea that works well. So you know that if you can get someone onto your platform and get them to reach that aha moment, then you'll basically guarantee engagement and retention. Then you leverage what people are doing on your platform to figure out, if I change this user experience a little bit, then perhaps there will be a better upsell opportunity. And so then you improve the in-app purchase opportunities, you improve the ad experience. That's how you make more and more money. Clearly it's been working because quarter over quarter, year over year, Zynga has been making more and more money. Now the challenge to this idea is that Zynga is not known to be one of those companies that create, spanking new innovative ideas. The traditional gaming studios, they come up with a great concept, they throw millions and millions of dollars at the problem with really smart people that go into this R&D mode, right? And then they come out with a really amazing idea like Call of Duty, League of Legends, Angry Birds. These games are one-hit wonders, and all the company needed was that one hit to essentially go public, if not get sold for billions of dollars, right? Zynga doesn't need to do that. Zynga is looking for incremental growth and consistent growth. Instead of taking risks on a title and a gaming experience that they're not familiar with and don't know if it's going to be a winner or a loser, they just concede on that point. What they do is they buy a company that took the risk and built a winner, paid them tons of money, get that title from them, and then start iterating off of that title. So if you look at Zynga's game library, those are the two categories of games that they have. You have casino-related games, you have merge-related games, you have Candy Crush-like games, etc., and then you have games where they've acquired, like Words with Friends, for example. There are two major challenges I see in investing in a company like Zynga. One is that I think they're benefiting a lot because of COVID. We're all locked up, we can only do so much, and so we play games, right? This creates a lot of user growth for any gaming company. But I'm not really sure if people will still continue to play these games once the lockdown is removed. So that's an obvious one, challenge number one. The second challenge is that their PE ratio right now is 150. And what that means is that people, our investors, are willing to pay 150 times what the earnings are. This is incredibly optimistic. If you look at established companies like Activision, their PE ratio is 40, which is essentially like tech standard. For example, Microsoft is around 35, 40. At 150, the investors are basically saying that they're expecting this company to grow explosively for a very long time. Which also means that if anything bad happens, the stock's gonna tank. And that is definitely not ideal, especially during a crisis, especially when we're entering a recession, in my opinion. But the business model makes sense. There's a shit ton of money involved, and it's a great timing because of COVID. I want to invest in this idea because it sounds beautiful, right? But I think there's a better opportunity here, and that is Glue. GLUU is its ticker. They also follow a very similar business model like Zynga, where they have working titles with user experience, engagement, and retention that they know that works, and then they iterate off of it. But the smart thing about them that I really like is that they leverage star power. They've created Kim Kardashian's app, Kylie Jenner's app, what's that guy's name? An app for Gordon Ramsay, an app for WWE. All of these apps are collaborating with celebrities based off of games that we know have good engagement and retention. For example, Gordon Ramsay's app is based off of Diner Dash. Diner Dash is a really famously addictive game. And then you add Gordon Ramsay's flair on top of it. Now you have some uniqueness to it and some star power to draw user into an app that has good engagement and retention. So that's a win-win. I have no idea how Glue pulled this off, but it's amazing that they did. And I think this has the best growth potential because I'm from an era where pop is a concept that has been proven year over year. If you can follow the pop culture as a business, then you can benefit in millions. And so I think this is why Glue is a better bet. And if you're not into this pop thing, Glue also have partnerships with the MLB. They also have partnerships with Disney. And so all in all, in my opinion, both Zynga and Glue are very attractive companies. They're both doing very well. In terms of PE ratio, they're both on the high side. But I think Glue is a better bet because they're playing a game that involves explosive growth. If you involve celebrities, then you're basically capturing their user segment into your product. I think that is a much better opportunity to get explosive growth, and therefore I think is a much better short-term investment. So now that you have my opinion, which app would you invest in? Would it be either, or would you invest in something else? I would love to hear your feedback. If you have any questions or concerns, please leave a comment as well. And if you have any suggestions for what you want me to talk about next, please hit the subscribe button if you haven't already, and then leave a comment. Thanks for watching, and I look forward to working with you next time.